Retail sales coming in hotter than expected in September, rising 0.7% month over month, more than double the street's estimate. The report showing consumers are still spending despite high inflation. Treasury yields moving higher on the news, with the 10-year yield topping 4.8%, now at 4.85%. For more on the consumer and how spending is affecting the economy, we turn to Laureen Gilbert, CEO of WealthWise Financial. Laureen, good to see you. So we are getting all this news that seems to indicate the economy is going well. The GDP now forecast from the Atlanta Fed's up now to 5.4% for the third quarter. Is this good news for investors?
Well, yeah, if we look at the retail sales and we break it down even further, what we see are people are spending a lot of money eating out. So where restaurants have increased their prices, people are still going out to eat and absorbing those costs. And we're also seeing people buy online retail, like Amazon, let's say. So people are still spending a lot of money. But if we really look at the consumer, we think that there are some cracks coming. And that's because when we look at consumer credit, even though overall consumer credit is down year over year, 3.8%, where we've seen an increase is on their credit card debt. So revolving credit has gone up year over year 14%. So while the other component has gone down, the revolving debt has gone up substantially. And now we have student loans being due, and we're seeing unemployment numbers, while they've been low, creeping up. So we feel like there is this fulcrum that's going to happen, probably around 4% on unemployment numbers, where we start to see the consumer finally pulling back. Hasn't happened quite yet, but we think it's coming.
Laureen, how do you think the Fed is thinking through this economic data? You know, since they last met, you got that blockbuster jobs report, beats expectations, core CPI is up 0.3%. Now you have this strong retail sales number. I mean, you might think, okay, central bankers would be believing that another hike's on the table in November. But on the other hand, Laureen, we've had a number of policymakers come out and say, you know what, these rising yields are doing the job for us. How do you think Jay Powell is thinking through these economic reports?
Yeah, well, as they've said, they're going to continue to look at the data. And like you said, yields have been going up. They've been creeping up and, in fact, doing that job for them. So I see a rate hold, not a rate hike. I think we're in a holding measure right now, and I think that's going to be extended. And what's happened, and the reason why those yields have been going up, is that we've seen this push of expectations of a rate cut go from March to July. So with that, we're seeing the yields increase. So what in effect, it's the bond market repricing. And so that's hurt as we've tried to increase duration, but we think that that story still holds, that we've got to increase duration as we get to this point where eventually we're going to see the benefit of longer duration and those higher yields.
What do you think is the ceiling for yields then, Maureen?
Hard to tell any kind of ceiling, but what I will say is that we've seen the repricing. We continue to buy into that. And knowing that what we're seeing for the future, in other words, the next decade, are outsized returns in the bond market. Whereas money has been flowing to money markets, and that's certainly understandable, yielding over 5% in a money market versus your bonds have been, in effect, losing money. But if we move forward from here, what we see is a much greater opportunity in the bond market than we see in a money market. And that's where the flows should be going, even though they've been going to money markets.
Any opportunities on the equity side right now, Laureen? Do you see any good areas right now there?
We do. We think that small cap exposure is a very good opportunity, and that's an area that people historically have had a lower concentration because of the volatility. But with the gains that we've seen in large cap mega growth stocks, we haven't really seen it on the small cap side. We do see those opportunities there. And not as much in the developed international markets, but more in emerging markets. That as well is an opportunity. And then finally, I would say on the value side, given relative value to growth, we see opportunities on value over growth.
Laureen Gilbert, thank you so much for joining us today.
Thank you.